I think the biggest news event was the impact last Friday only of the budget statement or mini budget statement. And I think initial movement in the gilt market was the unexpected large issuance and permanent tax cuts, which I think pushed up the cost of borrowing at the medium and short end and the long end, actually. I think it accelerated on Monday and Tuesday, and that was followed by the unprecedented action by the Bank of England to buy back bonds at the long end.
Is there a lingering impact now from what's transpired? The fact that it had pushback from the largest fund manager in the world trying to cover its bases, the fact that pension funds had to scramble trying to sell assets as you had marked to market to raise some cash. Do we see ramifications now lingering in the UK market?
I think specifically the strength of LDI investment strategies is really coming under scrutiny. I think you had the CEO of Next highlighting his concerns on this. And I think it's clearly a concern of the Bank of England and other sort of regulators how this has occurred, really. And the risk management on that is clearly a question that's going to continue for a while.
Brilliant question, Shilen, because on the face of it, why did a spike in gilt yields have to be a problem with the underlying gilts? These pension funds are long-term investors. They also have very long-term payout programs. There shouldn't be financial stress from this degree of volatility until you throw derivatives into the equation. So can you just briefly help maybe our layman viewer understand why these derivatives have become an issue at this point?
Absolutely. So if you think about it, typically they're using interest rate swaps, leverage is about circa up to 7 times, and they have margin calls. And the risk models they use do not assume large movement in gilt yields, long-dated gilt yields. And when that happens, you've seen margin calls. And I think the suggestion is that they've been forced to sell the gilts, which are the most typically the most biggest asset they have. And this clearly creates a negative feedback loop. So yeah, it is more challenging and difficult for underlying managers and all of these strategies over the last week or so.
You're saying actually that it's poor risk management by these fund managers, and it's nothing to do with the volatility in the underlying gilt and the risk related to that gilt. It's the overlay that they've put in to manage liquidity levels in their portfolio, and they got it wrong.
Partly, I think you can blame, lots of blame to give around. I think partly the government is partly to blame. It was the sort of surprise tax cuts they pushed through, and which has sort of spooked markets, really. And I think the combination of all these events has sort of worked together. I think we moved from, there was a risk of a liquidity crisis turning into a solvency crisis, as you mentioned earlier.